Welcome to the latest episode of the Savings Guru podcast. I'm really pleased to be joined today by Stephen Marks, who's the Business Development Director of Newcastle Strategic Solutions Limited. Welcome, Stephen.
Hi, James.
It's great to have you on board today. I'm quite conscious that while myself and others who work within the industry are really aware of you and Newcastle Strategic Solutions Limited, you're not a name that will be familiar to probably our savers that are listening in. So perhaps you could kick us off with telling us a little bit more about the history of Strategic Solutions and how you've got into the savings market and your role within it.
Yeah, sure. So Solutions is part of the Newcastle Building Society group. And in the late 1990s, we started to provide technology to other building societies. So we already had a history of supplying services to others. And then in 2004, the Building Society launched its own internet savings account based on a platform which we had built ourselves. And we were one of the very first building societies to launch into the internet savings market. And then a number of months after that, we were actually approached by Bradford and Bingley Building Society, who asked if they could buy our internet savings system from us. They've been trying to develop their own system for a number of months, but weren't really getting there, and they'd seen the success that we'd had with ours. So we considered that request. We decided that our system that we built ourselves was just too valuable to us. So we said, no, we wouldn't sell it to them, but we would become their e-savings arm, if that was of interest to them. And they agreed to that. So we then went ahead and we launched a fully branded, white-labelled savings operation for Bradford and Bingley, where we managed all of the customer activity and various other support services as well, such as financial crime and payments. And that was really the start of Solutions, and it grew from there. And now we've developed over the years a strong reputation within the industry, both with other savings providers and with the major consultancy firms as well. We've launched many new banks into the savings market over the years. We've helped a number create new online channels. And we've also helped existing providers with their existing savings books as well, where we've transferred them in and managed them as well. So looking back, I think the opportunity with Bradford and Bingley, it was almost by accident more than design, but it's really helped create the quite substantial business that we have today.
It's a really interesting in history and how you got into the market. You're quite a significant player in the savings space. Can you tell us a little bit more for the listeners' benefit about your kind of size and scale within the market in terms of the number of clients you've got and the size of your customer base?
Yeah, sure. So it has got real scale, both within the market and also within the Newcastle group. We manage well over 1 million accounts on behalf of 12 live clients for savings management services. And we've got other clients that we're currently working with at the moment who'll launch in the months ahead. And our clients, they come from a number of different areas. So some are challenger banks, others involved in things like motor finance or credit cards, trade finance, or even store finance. And examples amongst our existing clients would include the likes of Paragon and Aldermore. And in terms of new clients that are going through the process to launch next year, that would include the likes of Recognise and BNorth, amongst others. And as I say, within the group, it's got quite substantial scale as well. So about 600 of our colleagues work in the solutions business, and about 140 of them are in tech roles.
I mean, that's a significant scale of operation that you have. I mean, I've had the privilege of visiting your site, and the scale is kind of really brought to life when you come there. I would say you're almost like one of the best kept secrets within the saving world. I think most savers would not know that they're being looked after by yourselves rather than the bank itself. Yes. Would that be the case from your perspective?
Definitely, and I think it's really important that is the case. So customers applying and operating their accounts through any of our clients, really they would have no idea that there's another organisation sitting behind who's actually managing all of those savings operations on behalf of that particular bank. And I think that's evident through a number of different things. So the platform itself is all fully branded and white labelled on behalf of each of our clients. So if you're a customer coming into the bank website and you see their savings product selection and you click on the apply now, at that point you seamlessly transfer through into our platform for the application process to commence. That it really is all quite seamless, and the customer just wouldn't detect that was taking place. But then beyond the platform itself, the customer service operation that supports it in the background, that's obviously all fully branded as well. So we answer the phone in the name of the client, and we correspond with customers in the name of the client as well. So again, all completely seamless. And I think probably another important factor is tone of voice for our clients. So we spend a lot of time with our clients when we launch and set the operations up to make sure that we really understand their brand values, their tone of voice. Our clients help us in the training that we do for our staff when we set up operations to make sure that those brand values and that tone of voice are being fully reflected by our staff when they're providing the service to their customers. So really the whole thing is seamless, and it's absolutely the intention that the customers would have no idea that they're actually dealing with a different organisation sitting behind that bank.
I guess it's almost like a bit of a badge of honour. You're doing your job really well if savers aren't aware that you're involved, and it is seamless. That it's one of those kind of roles where you're almost the unsung hero.
Yes. I mean, one of the things that we always get a lot of pleasure out of seeing is the industry awards that our clients win, and year on year, our clients have good, consistent success in the industry awards. Now, we like to think it's partly based on the service that we provide. We're not pretending it's all down to our service, but we do get a lot of pleasure out of seeing our clients win awards, and we know that behind the scenes, we are playing that unknown role and looking after the customers, and we obviously get a lot of satisfaction out of that as well.
I suspect that one of the questions that if we had some of the savers on would be asking would be, why would a bank choose to come to yourselves rather than to build the customer services and operations of their business within the bank?
For a new bank that's coming to the market, I think there's a number of reasons why they would want to come and talk to us and why they would want to pursue a service through us. I think that the most important factor for some is that we de-risk their entry into the savings market, quite often at a time when they're focused on progressing their application for a banking licence and building out the rest of the bank. And we de-risk that entry because we've got so much expertise and experience in launching new providers into the market. But there are a number of other factors as well. So obviously the services are based on our existing shared platforms. So we believe we can get people into the market more quickly than as if they were trying to build and develop their own team and proposition from scratch. They're obviously taking advantage of the customer proposition that we have through our digital platform, which is something we continue to invest in. We've got a great track record in providing great service to their savings customers. I think that's partly reflected in the industry awards that I've mentioned, but I think you also see it through some of the sort of customer ratings and reviews that you've got on certain client websites. And I think another really important factor is that we look after all the regulatory requirements for them, ensuring that we're providing a compliant service. And I think that in itself is quite a big challenge for certainly some of the smaller banks to look after those things themselves. And then maybe the final point for new people coming into the market is this obviously sort of frees them up to concentrate on the ongoing management of other parts of the business, which is maybe where their real expertise lies and where they would see the sort of value generating activities. So that would be for new entrants that are coming into the market. But we do also do business with people who are already existing providers. They already have existing savings books, and we get approaches from providers about managing their existing books. And I think that can be for a few different reasons. It may be they're struggling with old legacy technology. That creates risk. It becomes expensive to look after as well. You might have decline in knowledge in terms of how you look after those systems. And it can also be a lack of digital capability. And for all those reasons, they may see us as being an attractive option in terms of looking after the savings book. And if anything, I think that the pandemic this year has probably made firms look even more closely at that. So, I think we can all see that digital adoption generally through consumers has accelerated this year. So firms are really having to look closely at what kind of digital services they've got and their future operating models to make sure they're as effective and cost efficient as possible.
One of the things that some savers probably won't be aware is that you predominantly at the moment service the personal customer market, but you've recently announced, and you mentioned that they're going through the process at the moment and recently got their license recognised. There was some PR recently that you're now going to enter the business savings market and recognise are going to be one of your clients on that. Can you tell us how that's come about and kind of what your plans are for the SME space?
So we're going to launch into SME savings the early part of next year. It's something that I've been working on for a good number of months now, and we're really excited about that development for next year. I think our decision to launch into SME savings was partly driven by feedback from existing and new clients, and we also saw ourselves that it was a good sort of complementary service to what we already did through retail. I think for our clients, that there were a few points around that. So there's probably about half the number of providers in SME savings as there are in the overall retail market, so it's slightly less crowded. The rates for SMEs lag those in the retail market normally, even in this low rate environment. And I think our clients would like to tap into multiple sources of funding, and being an SME gives them another option on that front as well. And I think for our part, given our previous experience in retail, we believe we can develop a market-leading solution on SME for opening and managing those accounts online. Through the bespoke work that we're doing with our customer due diligence partners at the moment, we're developing an application which we think will optimise immediate acceptance rates through that online journey. And with SME, we'll obviously have a roadmap in place. So what we do launch with in the early part of next year, which from day one will be an excellent service, but thereafter it'll be something that we just continue to invest in and develop as we do with retail. So overall, a really exciting development for us for the early part of next year.
It's a really interesting point you made there about optimising the conversion there, because from my experience, that's one of the barriers for some of the new entrant banks looking at that market. The number of constituent parts from a business applicant to look at increases the chance that something won't go straight through an automated application solution, and I think that's one of the reasons why some have shied away from entering that space. I'm sure there'll be people phoning you up for conversation on that, because that's certainly an area that's been a challenge for the industry.
Yeah, absolutely.
There's obviously quite a lot going on. Are there any other plans for your savings proposition in the future that you can share with us?
So, as you can imagine, our clients always have a really keen interest in where we're taking the proposition. They want to make sure that their service is always going to, be at the kind of forefront of the market. So there's a good, healthy tension on us to make sure that we are continuing to develop the service. And there are a number of things we've been doing and we're working on, and other things we've kind of got an eye on in the future for how we can continue to develop our proposition. So I think probably the first thing to mention is the significant investment that we've put into our technology, our digital teams, our ways of working over the last couple of years. Is without that underlying infrastructure and approach, you're just not going to be able to take advantage of the new initiatives that will come along in the future. So that's probably the first thing to mention. On the initiatives themselves, the most important development we've had this year has been the launch of our savings app, which was in May, and that's now in the process of being rolled out to our clients beyond Newcastle Building Society, who took it initially. And through that, customers can view and transact in their accounts. And again, there'll be an ongoing sort of programme of development with the app. And it's really interesting to see already the experience of the Newcastle, where in the relatively short time the app's been out there, 40% of all account logins are already taking place via the app. And customers are viewing their accounts on average 1.4 times per day, which is fantastic for building more customer engagement with the brand. So mobile app's been a really significant step for us this year. And going forward, we see it very much as a mobile-first approach, where developments that we have generally will always be considering how they'll fit, how they'll work within that mobile app environment. So that's one area. I think another area is just the customer experience generally. So as we all know, consumers have got heightened expectations from dealing with big tech, the likes of your Amazons, your Netflixes. And I think even some of the newer digital banks that have come into financial services in the last couple of years, they've definitely helped raise expectations as well. So we've become pretty relentless, to be honest, at looking at all of our sort of different customer journeys, particularly the online ones, to make sure that they're as efficient as possible. We've had good success this year with improving certain journeys, which have led to much lower contact rates and customers who have felt the need to call us to maybe talk through some issues they've had. And I think that kind of relentless focus on the customer experience, that'll be key going forward as well. New product initiatives, that'll always be important. I've talked about SME, but I think in the future, it'll be interesting to look at people's savings habits. Given the kind of financial shock that a lot of people have had through the pandemic, there could well be increased interest in things like savings pots. And probably another area of interest is mums and dads who are looking to help children through important life events, such as buying their first home. There could well be some product opportunities around that as well. Payments is probably another key area that I'd mention. So something we're looking at the moment is request to pay functionality, where customers will be able to fund their accounts both within their application and within the account. And that's instead of sort of going out separately into the bank account and pushing payment through. So I mean, the whole payments arena, again, that's something where consumers have got heightened expectations, given the ways in which they pay for all sorts of other goods and services. And I think having really slick payment processes within internet savings is important as well. And the final area is probably just other innovation generally. So there's an ever watchful eye on our side on new developments such as voice, and especially open finance. So obviously we've had open banking, it's kind of evolving into open finance. It's difficult to say exactly how open finance will take hold for savings. We're not 100% sure. Our clients are not 100% sure either, to be honest. But I think what is clear at the moment is you have to have the right mechanism to be able to take advantage of whatever those future opportunities might be. And that means having the industry standard open APIs, which we started to develop ourselves through our new app. So I think that's going to be another really interesting area of focus across the next few years.
There's certainly a long list of things there. You're definitely not going to be quiet over the coming
I don't think so.
months, Steve. The app thing there really interests me. I think I did a piece of work a year ago, and there was barely anyone in the market for savings that a dedicated savings provider that had an app, and I had to do a similar piece of work recently, and there was a significant minority, should we say, of providers that had got it, and I'm increasingly seeing more and more moving there. One of the things that has kind of deterred people from going into that space is the feeling that a lot of the savings products are not transactional. They look fixed rate bonds. Do people really want to see them regularly? I was really interested by the stat you threw in there about the activity on the app Do you think that's some of that's maybe that some of the thinking's been flawed on there, or do you think that the COVID situation has had a part to play in terms of driving people more to digitization?
Yeah, it's a good question, and I think there are a number of things going on, and I think it's been a great surprise to us that it's been as high as 1.4 times per day on average. People do look at their accounts. I think there's just a convenience factor. It's just so easy to literally tap on your little app icon on your phone and use your biometrics, your thumbprint to take you in, and there you can just look straight away at what you have. So there's definitely a convenience factor. Within the Newcastle online base, there's a lot of lifetime ISA customers, sort of younger generation, who maybe as they're kind of saving towards the first house, there's more reason for them to be looking a bit more regularly at how that's building up as they're making plans for their new house. Clearly, if you've got access accounts, that's going to play a part as well. But I think even for fixed rate bonds, I think, and there might well be something around this with coronavirus where, given the financial shock of that for people, people have probably thought a bit more deeply about what kind of savings they've got, what safety net they have. And I think there has been commentary within the industry that probably for some time to come now, people will be much more mindful of having a good safety net in case there are any other sort of financial shocks that might come for them personally. So, looking more regularly, looking more closely at their overall financial position and planning how that's going forward. I think that in itself was probably a reason why people are looking more regularly. So, whether it's fixed rate bond, whether it's lifetime ISA, whether it's access, I think people have different ages. I think there's more and more reason as to why you'd be wanting to have a look, and the app just gives you incredible convenience for doing that.
There's definitely a big thing about the that accessibility. It's just there all the time, isn't it? And it doesn't need you to kind of log on anywhere particularly. It's just something that's convenient and accessible. I'm really intrigued to see where the market goes on there, and whether we see sort of an increasing trend. Certainly, I think past experiences has taught us that if enough providers do something, then the market tends to follow fairly quickly. So I wonder if we'll see a fairly quick uptake now within the savings market in mobile apps.
Yes,
we've seen a huge amount of change over the past decade. With it's something like 50 new savings providers that have come into the market, and I think we're up to 30 newly authorised banks in that time as well. But despite this, there's still a huge number of firms, and you mentioned a couple that are going through the journey. There's a huge number still looking at the market and going through that banking license application process. Do you think we're going to see this growth continue, or are we getting near the saturation point now?
In the immediate future, James, I think the growth does look set to continue, just due to the number of people who are already in the process and are lined up to launch over the next year or so. And despite the pandemic, looking back through the last year, we still received a number of inquiries from people who are looking to set out on the journey to create a bank. I think the savings market itself can accommodate more providers, but there are a number of factors I think that will shape just how many come through. I mean, one interesting area to start with is the non-bank lenders. So as a sector, if you like, or as part of the industry, they probably had a bit of a shock when coronavirus first struck, and some of the money markets, or the wholesale markets, sort of closed off for a period, which kind of jeopardised their sources of funding. And I think that did prompt some of them to think again about maybe they should actually take the steps towards becoming a bank and entering the savings market, so that they had that diversification in their funding. So I think there's still some serious thought going on around that. I think for for new entrants, other new entrants coming in as new banks. It's not just can the savings market accommodate more providers, but can the lending, is there opportunity in the lending market for those players as well? They've got to be happy about their opportunity for whichever kind of lending it is that they're looking to explore. And then it's almost like the lending first, and then the savings and the funding flows from there. Another interesting dynamic, I think, this year has been the availability of investment. So again, I think one of the consequences from coronavirus is that investors have become a bit more cautious as to what their future strategy is and where they're investing. And that there have been signs this year that investment for the new bank community has been a bit tougher. And then probably the other area of interest is the view of the regulator. So the bar was always set, and quite rightly so, really high for new entrants looking to come through and be banks. And the regulators reminded potential applicants in recent times of the standards and expectations that there are in running a new bank. So I think it would just be interesting to see how that plays out as people try and go through the process going forward. But I think overall there are grounds to be optimistic based on what we have seen this year, that growth will continue at least for a while yet.
I've kind of viewed the saving space as having room for more to come in, but the lending market potentially being the more challenging. I think what's been interesting about is COVID is potentially could change the shape there. Some of the new providers coming in are filling gaps that haven't been filled yet, but many are coming in and into existing markets. But just things like the number of adverse credit customers that would have been caused by COVID. I saw Pepper Money's white paper saying another 1.09 million. I mean, that's a huge number of people potentially needing to go into more specialist lenders who've kind of dominated the new entrant bank space. So whether we'll see COVID driving more demand for those type of lenders who, as you pointed out there, may look to fund it through the bank route rather than the traditional wholesale finance routes that many have.
Yes,
hasn't been a dull space for the last sort of 12, 13 years I've been in, and I think that's going to continue. One thing I always have to ask, Stephen, is as regular listeners will know, is the big question: if you were the Chancellor for the day, and Rishi's got bigger things on his plate than the savings market at the moment, but if you're in his shoes, what's the change that you'd make to benefit savers?
Yeah, good question. So an area which is probably quite close to my heart at the moment is the ability of the younger generations to get their first foot on the property ladder. And I say that because I've got one daughter who has just recently bought her first home, and I've got another daughter who's just in the process of trying to buy her first home. So, looking at the challenges that the younger generation had anyway around raising sufficient deposit to buy a house, that was already something that was of interest. And we've seen the success in recent times of things like Help to Buy ISA and Lifetime ISA in getting younger generations onto the housing ladder. And let's be honest, it's also fueled quite a lot of success within the house building sector as well, with the sale of homes. So they've all been great initiatives. But I think, in light of coronavirus and what's happened this year, the availability of high LTV mortgages has definitely been cut down quite dramatically. So at a stroke, it's much harder for younger people to sort of try and get their first foot in the ladder to get a mortgage with the right kind of loan to value relative to the amount of deposit they have. And I think inevitably what it means is that reliance on bank of mum and dad, that continues, if not increases. And although things like Lifetime ISA and Help to Buy have been, really good initiatives, I do wonder whether there's something the Chancellor could do for the parents. Something around specifically putting savings aside to be helping the younger generation with things like house purchase. Are there incentives that the Chancellor could provide to sort of help that part of it as well? because I think it's just looking increasingly tough for the younger generations to be buying their first home. So as a parent with two daughters that have gone through the process or are going through the process, I've got a lot of sympathy for people in that position, and any incentives in that on that side, I think would be very welcome.
It's definitely an area that I think we're most likely to see some action. I think anyone that's followed me for any length of time will know that I'd like to see ISIS reformed, but I don't think that space is going to get tackled anytime soon, given what's going on. But I can see something being done specifically in that space to help, and certainly have seen fintechs like Nude Finance come in who are trying to address that space too, and I think it is an area that remains challenging, and I'm pretty sure that that will get looked at fairly shortly. It's been a hugely interesting market to be in over the past couple of decades. Huge amount of change for what was quite a stable industry before the financial crisis. What do you think we're going to see in the next few years?
There are probably two key things that stand out for me, James. I think first of all, the impact of new entrants, which we've already talked about to a degree, but they'll continue to push competition, albeit with still low rates. And for example, we expect the arrival of JP Morgan early next year. It'll be interesting to see what sort of impact they have on the savings market, but whether it's them, whether it's others, I think the continued arrival of new entrants will have an impact. So that'll be interesting to watch. And I think the other area is, again, something else I've already touched on, and that's open finance and how that starts to take hold over the next few years. I think there'll be a combination of growing customer awareness and interest in the services that are out there and can be provided. And I think also increasing capability from providers themselves in terms of what's possible. And I just think gradually it will sort of start to take hold. Quite in what way, as I said, I'm not entirely sure, but I think open finance we're definitely on a bit of a journey with that. And I think that will start to take hold more over the next few years as well.
I think the JP Morgan entry is really interesting. I mean, they've yet to confirm it's true, but we've seen from regulatory filings that that things are definitely happening there. And given that Marcus put 10 basis points on the easy access market after they entered, and they're a similar sort of size, JP Morgan shows what kind of impact that they alone could do. But I think that's more likely to be moving rates or product specific. I think the really interesting piece is where the open banking and open finance piece leads us, because I think that's an area that we've yet to see any real impact. But I think it's coming. I think when it was kind of first announced, a lot of people sort of thought it was a bit of a damp sort of squib, because I think people outside the industry kind of thought, it's sort of so built up that they'd see things immediately. But the reality is, it's something that takes time to develop the technology to take advantage of it, and I think we've yet to see that really gain any traction. But certainly from some of the startups and fintechs that I've seen, I think that's only a matter of time, and I think the next few years we'll see some of those services shape things very differently.
Yeah, I agree.
It's definitely an interesting space to continue to be in. Stephen, it's been an absolute pleasure to have you on. I think it's been great to kind of hear the story, and I think it will be something that will have surprised some of the savers to know that such a big provider has been in the market for so long, playing such a crucial role that has gone largely under the radar from outside of the industry, which as you said, is that, that's you doing your job well. Thank you very much for coming on, and I look forward to speaking to you soon.
Great, thanks, James. I enjoyed that.
Cheers, Stephen.